Wow, we're up 257 points today. Welcome traders, D7 here. 257 points. It's amazing what a little bit of news will do. It's is it just me, or are the markets focusing on the lemonade instead of the lemons? It's just amazing how bearish everything is out there, and all we need is Intel to come out and give guidance that pushing shares higher. And you have IBM and eBay beating estimates. You have Coca-Cola beating the street. Wow, you just had a little bit of information coming out that sent the markets soaring. Anyway, let's take a look here. The Dow, we had broke down. We were under the moving averages. Very, very bearish. But look at this. I want to blow this up just a smidgen so we can take a look here. Look where we closed above the 50-day moving average on the Dow. When we closed above it, that was bullish. It was good to see that. But if we go back and take a look at the S&P, that we were down below, both the 20 and the 50-day moving average. And that was quite bearish. So this was when we pushed through the 50 and then the 20, we were just off to the races. But we have overhead resistance. It's coming. It's there. We're gonna have to face that coming up, pretty soon. Let's look at the Nasdaq. And Nasdaq has a little bit of ways to go before it runs into any resistance. That did a gap and a run. Very nice. And while we're at it, let's look at the Russells. The Russells closed at the day's high. Very strong. It has a little bit of weight till we get to some resistance on the trend lines. We do have a swing high right here that it's going to be running into. So anyway, it would surprise me in the slightest if we have profit takers tomorrow and we see a quick sell-off by the end of the, or by the beginning of the day tomorrow. But it's anybody's guess. Anything can happen here. And I know that I did some day trading. Let me show you a trade I was in. SSO, this is an ultra long ETF, ProShares. Go to ProShares.com, click on products, and you'll get a big list of them, ultra ProShares. But I'm going to go to a 5-minute chart. 5 minute. This is a 5-minute chart, and I'll show you what I did. The markets opened in the morning right here, and we popped, did an immediate pullback. And right here on the pullback, a lot of times you get a pop in the morning, and there's our pop, boom, we ran up first thing this morning, and then we started an immediate pullback right there. We're at the 20 intraday moving average with the doji. We should go up. I played this to the upside, ran up, stopped out there. Remember, I moved my stops underneath. That was an expanded range candle. I was halfway and under a little bit. Then I put it under here, under there, stopped out. Did not catch this. No. I did catch this run too. I caught this run, got in. I did a little pullback, and when I saw it bounce, and I got in right there. Ran up, and then sold out. Now, and then some time. Noon came around. I wasn't playing it. I was away. I did not catch this run right here. Pulls back. Now, I come back for lunch about right here, and this is what I'm seeing. We pulled back, and I was looking for a bounce here. We didn't get it. We went down. Right there, we're at the 50. And I'm thinking, put a fork in us, we're dead. Now, when we broke down right here, I went short. I went to SDS, which is the ultra bear short, and ran down. Then we shot back up. I stopped out here. Then we're starting to show some bullish moves, but we're still under the 20 intraday moving average. We popped up over it right there. When we popped up over this, and we have a base here. Watch this base. Well, I went too far. Right here, we have this base going. I was teaching at the time. I said, look at this. I started putting my order in right now over the top of this base, if we could get over there. And as I was putting it in, it popped. So I caught it about right here on the, I caught it a little late. I wanted to get in there, but I ended up catching it about right there because I was teaching my high base strategy at the time. This thing runs up. I put my stop underneath, everything's hunky-dory. We have this other kind of base. It starts to go up there. I'm in it. This thing just kept running. There, we did it. We stopped out right there. When we popped and went up again like this, I went ahead and reloaded. The markets were that strong. So I stop out there. I reload about right here. We're in. Then we get this. Now this is right at the end of the day. Well, let me tell you. I can tell you already what. Whoops. I can tell you already. This one I stopped out of. I had this big candlestick. Usually at the end of the day you get a little sell-off. I went halfway and down a little bit. The very next candlestick I stopped out right there. And it continued up. I wasn't going to chase it. It's the end of the day. And then we close, and there's where we closed. So anyway, I'm flat the market at this moment because I don't know what's going to happen tomorrow. We might start off strong, then drop. We may gap down and then get a nice bull rally. So anyway, it could be very turbulent tomorrow morning. Be very careful during amateur hour. So there was my trades today. A lot of day trading in this market, guys. Let me show you this. I wasn't going to show this. I'm going to though. S&P. I'm going back to the S&P. I'm going to go to the daily here. Look at what this market's doing just overall. We're just sideways. See this? This is called a sideways trading range. It's a trading range. Is all we're trading between 1400 and 1280. And there's our trading range. If you were to calculate the last 3 months or so, all the candlesticks in this range, it's considerable. As a rule of thumb, I like to be flat during sideways markets because it will just beat your brains out if you want to be holding long in this sort of environment. But anyway, a lot of day trading. I like these. Look, every time we get these big candlestick, a sell-off, big candlestick, choppy sell-off, big candlestick, what should happen? Sell-off soon. I probably see another day update tomorrow and a drop. So anyway, if you don't have $25,000 in your U.S. account, you're not legally able to do too many day trades each week. So be careful with your day trades if you don't have that. If you have more than that, feel free to do day trading if your job allows it. And just be very, very careful if you're doing swing trading in this environment. Long-term holds could be very deadly. Because if we come up, hit our head, and drop, we will have our double top right there. See it? We have our double top. If we hit our head there and drop, so that means we could be, bad things could happen. And remember, we're right on schedule. I'm going to go to our monthly. Here's our monthly chart. Let me get rid of some of this stuff. So, long video I'm doing. Remember this? We've been looking at our monthly charts, draw our trend line. Right there, we broke down. Right on cue. We're having a bullish April, just as we called. I think we'll probably have a bullish May. I think we're going to have our turning point in June. We could crash and burn. I'll tell you, if we don't make it up there, if we start basing sideways here, it's called a low base formation. That's very bearish. Any way you look at this, I think our summer will be the start of something quite bearish. And we're going to end 2008 on a very sour note. That will make a lot of us a lot of money once we, if we know about trading puts or selling short the market or buying bear ETFs. So anyway, there you have it. 9-minute video. Take care. Happy trading to you.